Hi guys, it's been a while, I guess, a couple of days, last week we've been trying to get this out, which is the release of our new accounts and a new dashboard for our clients. It's live on the website at the moment, but there's still some back-end issues that we're having, so it's not 100% where we want it, but hopefully by the end of today we'll have those issues resolved and it's rock and roll time. So yeah, the Empire accounts released today, trading up to 20 million. We've made some changes to the Premier Prop accounts as well, but that's all available for you to see on the website. So the Empire starts at 50,000 account on the Mongol Empire and up to a $500,000 on the Roman Empire. First level is just for us to see how you trade, and if you've got the skills, and if you can, then away you go. 10% drawdown, 10% target, and they go up to, the Roman goes up to 20 mil, the Mongol up to 10, so that's kind of replacing the president, which we've removed from the Premier accounts. And yeah, markets have been pretty quiet overnight, mostly treading water. There's a bit of a bid in the euro, and I'll explain a bit more on that in a minute. Stocks up, smalls. We've got VIX, dollar index a little weaker, as the risk on environment, it's not huge, but it's not risk off either. So the safe haven flow isn't exactly there yet, and we can see VIX is down a little. So the market's not too concerned about what's coming, right? And what's coming is it's a 90% chance that we'll get a interest rate rise next week from the FOMC. We've got inflation still very high, and you've got the debt ceiling negotiations happening, and a lot of talk about that. There's a well, every time it comes up, you know, the debt ceiling is reached. There's always party politics being played as to jockeying of where that money's going to be spent, and should they be raising it. But the looking ahead, we've got, you know, Aussie inflation tomorrow, consumer confidence. That will be a key for the US, because the consumer spending is 60% of their GDP. So you want their confidence high in the consumers, and if it's not, then you would expect interest rates to be coming off, and if it is, then you expect interest rates to be coming up. So inflationary. Then we've got GDP and the BOJ. But despite price being pretty subdued everywhere, there's one thing, and I want to show it to you, and this is why the euro is doing pretty well, is the USA sovereign risk. This is euro dollar credit default swaps, and we can see that during the banking crisis of 08-09, it got pretty high at 60, and again in 2011, 2013, 2015, COVID, and now look where it's at. So that's a lot of protection, right? And you're not seeing that kind of protection taken out in stocks yet, because VIX is off, but certainly there's a lot of movement of funds out of the US into the euros to try and protect against a potential hitstorm in the USA. So that to me is quite interesting. It's the only chart that's really actually moving, and boy is it moving. It's never been this high before. So it's quite interesting to see where or how that'll play out over the next couple of weeks, or maybe over the next couple of months. But looking at currencies and the majors, Aussie dollar just can't get away from 67. Euro, as I mentioned in the blog this week, should be tracking up, and I would be looking for it to sort of get to this level up here, around the 1150, 1112 area. Just grab a horizontal and put it in there. that's where I'd be targeting this run. You know, I'll say another 200 pips higher, 150 pips higher. It's looking pretty strong, and it should continue in that direction. Pound, similarly, also having another run off the back of a weaker US dollar, and I'd look at these highs here around the 126.50 mark as your potential target. Whereas dollar yen, as I mentioned, the 4 hour's been cycling nicely, but it just failed to produce a new high now. And as I mentioned in the blog, it's, you know, you're going to have the conflicting issues where you've got a bearish yen and a bearish BOJ, and they meet on Friday. And you've got the US dollar currently a seller's market as well. So you've got, you know, two reasonably weak currencies battling as to who's the weakest, really, and that makes it difficult for a trend to be had. You want to be trading a weak currency versus a strong currency, or strong versus weak. You don't want to be trading strong versus strong or weak versus weak, because you just get choppy markets. Yeah. Right, that's it for today. We'll try and make it back tomorrow.